Hey traders, how's it going? This is Chris at Verlo Trading. I'd like to welcome you guys all to this video. In this video, I'm going to just go over the broad stock market and crude oil when it comes to a bigger picture timeframes using price action and supply and demand zones analysis. I would say that my analysis, my style of analysis is different than 90% of the way people do it on YouTube. Most people are technical analysis driven and they're driven by lagging indicators. And personally, I only use price action, supply demand zones, and volume profile. So in this video, if you're watching this for the first time, I'd like to hear your opinions after watching the video. Let me know what you guys thought of this. If you enjoyed the video, please, leave a comment, like, and all of that, and let me know what you thought so that way I can make more of them if you guys enjoy it. Like I said, it might be a little bit different to what you are used to watching when it comes to market analysis type videos. So in this video, I'm going to basically go over daily and weekly charts for the S&P 500, Nasdaq, and Russell 2000 stock indices, as well as crude oil. And we're also going to zoom in a little bit more and look at 15-minute time frames and potentially look at some opportunities that could be setting up for next week. Currently, it is Saturday, July 30th. So I'm making this video on the weekend. Let's get to it here. So daily chart S&P 500. This week was a green week for the stock market. And, a lot of you probably are seeing memes about, okay, everyone was talking about a recession and now look at where the market's going, straight up, right? And so everyone's getting bullish and all of that. I generally stay away from watching news, listening to news headlines, unless I'm trying to get a feel for the general market sentiment. One skill or one thing that I use that I think is pretty accurate and reliable is I look at the most, and I don't want to get political here, but I look at the most leftist news outlet, which where I live, it's CTV News or CBC News, and I look at what they're posting, and basically if they're uber bullish on something, you probably want to be looking the other way, generally speaking. It's just a contrarian way of seeing things, but it's not like set in stone. I'm just kind of putting that out there so you guys kind of start to develop multiple ways of seeing things, different perspectives of analyzing the market, rather than, just following the herd and saying, okay, the news is saying this, I'm going to do this, right? So weekly time frame. Now let's use price action, supply and demand zones only. Now, I believe that the daily chart is a little bit cleaner here. So if we look at the daily chart on the S&P 500, you can see there's this accumulative zone here. In my opinion, this is a supply zone for the S&P 500. And the way we have approached it like this, with 3 strong green days in a row after a few days of consolidation, for me, this sets up a decent short opportunity, off of this area. Now, one thing you got to know about markets in general, especially when it comes to bigger picture timeframes and bigger picture players, is that levels like these, they tend to get overshot. And then what happens after they get overshot is always interesting. So that's why I think right now, the S&P 500, there's still a huge short opportunity that is set up in this zone right here, starting from these 4104 and a halves roughly. Because of the velocity of the price action approaching into this supply zone, I think it opens up an opportunity for short trade. And when we go ahead and look at the Russell 2000 here on the daily chart, you're going to see the same sort of idea because the Russell 2000 and the ES move very similarly. There's also a chance we can kind of just consolidate here for a while and go sideways for a few days, because one thing I know about these sort of high volume noted areas is that they can easily just suck in the price, and we can go back and forth for 3-10 trading days, as many as it needs to, before the market will decide to move. So it's really just a matter of going with what the market is indicating to you, going with what the market is telling you, and placing your bets and just sticking with it, right? Place your target, place your stop, and that's it. Sometimes traders that tend to decide to take a lot of break evens, you can easily get chopped up, in my opinion. So I'm pretty much from the school of know your setup, know your risk. And either you lose on the trade or you win on the trade, and that's it. Now, of course, there's going to be certain things that can change that. Like, for example, if something happens and let's say you missed on a target by a few ticks or a few points, and then all of a sudden something changed, now the market's doing something else and it's going against you. At that point, you can probably make the choice and say, all right, I think it's time to exit this, and maybe if I see something reconfirm, I'll re-enter. Okay, so I don't want to try and go on too many tangents here, but basically, the basic perspective here is that I believe the S&P 500 is into a supply zone on the daily chart. Let's go overhead and look at the Russell 2000 now, because it's very similar. You can see on the Russell 2000, we're basically trading right into this supply zone on the daily chart, which I believe is at 1880 and 2 roughly, okay? And of course, these levels, guys, I want to remind you that they're not perfect levels. They indicate zones where we are likely to see institutional participation or institutional initiation of new order flow. So that's one thing. And really, guys, these levels are not rigid at all. They're just zones that work, and they work on daily charts. They work on 15-minute zones. And like I told you guys, maybe you don't believe in it, but I believe in it because I've been looking at the market the same way for a very long time, and I've seen these things play out countless times over and over and over again. So for me, 1880.2 is a supply zone for the Russell 2000. And the way we've approached it right here, 3 bars straight in a row, of course, there's going to be a bit of overshoot because, on a Friday trend day, you guys have to get the context, right? Friday markets tend to be lower volume, options expiry, and most institutions, again, we're end of the month here, we're summertime. Most institutions probably were not even trading Fridays. And the market can float higher on low volume on a steady holding bid. It's a pretty typical scenario that I've seen many, many times since I started trading. So, you're more likely to get some overshoot. But bigger picture participants, you might start to see a bit of an offer starting to show up as it continues to float higher. Now, because of the nature of a floating higher market, those offers get taken pretty easily because, they're not really significant when it comes to the scenario of the current trading day that we're seeing, which is the market floating higher on a Friday idea. So again, overshoot the area, but, come Monday over the weekend, everything can change, right? That's what I mean. So bigger picture, we're into a supply zone. And I think that, what's going to happen over the weekend and Monday, Tuesday will indicate if we can see some sellers that enter the market. I personally think we're probably going to see some sellers try to hit into this market in this general area. And it all depends on the volume, the sentiment, the news, and if there's any particular news events that have to come out, like economic data in the morning that changes something, okay? So that's what I believe here. And we're gonna look at the Nasdaq now, which is the strongest of the 3. And this is sort of like the curveball, right? So one thing that I do believe in is that supply and demand zones on correlated markets sometimes have the ability to influence the correlated markets. So that's why I say this is the curveball, because if you look at the Nasdaq, really we've overshot this area, which was the supply zone. And really on this daily chart, there's nothing much to be looking at until we get to about these 13,550s. Because really there's not much clarity here within this zone right here. It would require us to zoom in a little bit and look at some of these days, potentially on a 30-minute time frame session profiles. And that's how I would get a better idea if there was any important areas to be watching here. But if you also just glance at the profile, the taper of that profile, it really doesn't give us much information. So what this chart tells me here is that there's not really much resistance for the Nasdaq in this area, starting from, where I had the supply zone up until, above these 13,000s. So again, this is, in my opinion, the curveball. So what I think now is more important is those areas of resistance in the Russell and in the S&P 500 and how the institutional players come in and trade around those areas. That, in my opinion, is going to have a pull on what the Nasdaq does. All right, so daily chart, and let's zoom out and look at the weekly chart on the Nasdaq and the Russell because we missed those as well. So bigger picture, we've seen a recovery here, and right now, bigger picture on this weekly time frame, I don't think there's any resistance until around, like I said, these 13,550s. Seeing the volume profile from only the weeks starting from March when we had the supply enter the market here on the Nasdaq, I would say the supply zone on the weekly time frame is right around 14,000, wherever this high volume node starts. Okay, but before that, remember there's this big daily chart resistance with this ledge in the profile. That's more important. And if we get above that and hold above that, then you're going to have probably a test of that 14,000 on the bigger picture time frame. Okay. So guys, right now, the bulls are in full control of the stock market, in my opinion, but we're right into supply zones on the daily chart of the S&P and the Russell. It's either you believe it or not, guys. Look, I don't sell anything on this channel, guys, and if you do appreciate these videos, you can actually check out the first link in the description to support the channel. And I actually started a Buy Me a Coffee page, which you can also use to support the channel, because on this channel, we do not sell any trading courses or anything like that, because we're focused on our trading. Simple as that. Okay, so let's get on with it and look at crude oil now. We're going to switch over to crude oil on a weekly time frame. Okay, so we're potentially towards the lower end of our weekly trading range, starting from March until now, which is going to be starting in August here. And Weekly resistance is up at 117.14. That's the weekly resistance. And weekly demand is going to be down at 87.79. That's going to be the first demand zone on the weekly time frame. Just from judging on the weekly chart, I would say the bears are still in control of crude oil on the weekly time frame. Now, I would say we have to zoom in. So let's look at the daily chart for crude oil now. Okay, so you can see here is that ever since we trade into these low 90s, we've seen a recovery to these hundreds, to this $100 area. And I'll be honest with you guys, I was looking pretty much bullish on crude oil for this last week that just passed. And the reason for that is because you have a big psychological number of $100. Number two is that you have a lot of traders on YouTube, people that are clueless that I watch their videos so I can know if I need to be fading them or not. Number two, a lot of people were still pretty much bearish on crude oil. And number three, the price action is indicating that the market is not really as bearish as these people think it is, in my opinion at least. I mean, when you see a demand zone like 96s, the market comes down pretty aggressively and it, overshoots it, and then it starts to bounce, and we see, a buyer enter the market and the buyer hold their positions and defend their positions. I mean, that pretty much indicates to me that, we have a buyer in the market. We have some demand in the market. So if you look at, last week's price action here, I mean, we have some one-time framing starting to show on the upside here, where we have these bars closing with higher lows, right, and higher highs. So in my opinion, there's a bit of a bid in crude oil, but it's also, I'm a bit skeptical too now that we traded up to these 101s and something. So we actually traded right into the resistance zone, the daily chart supply zone, in my opinion, which was at 101.51 in that area. And on Friday morning, we traded into that pretty aggressively on a one-sided move, and it also rejected it pretty aggressively too, which is really interesting to see those things. So now this line is made into a red line because the resistance level, the area of supply is still there, but because it's been tested, now it becomes a poor area of supply or demand, meaning that I'm not going to bet that it's going to hold if it gets there again. That's my way of doing things. Now, if it breaks and then it rejects again, that opens up a scenario for a trade. Okay, so crude oil for me right now, guys, there's a lot of back and forth action. The scenario here is if you're long, you're pretty much sitting pretty, but also there's a big risk that you can see a couple of tests, right? So right where I have this 96 zone, this is on the low of this last bar, so the last 2 days. And actually, it's basically the low of the last day now. So 96 and 41, basically. So I'm watching whatever we see going into Monday, Tuesday, however these traders are trading if the market flushes down below 96s or around to 96s. You're going to watch for some potential demand around that area in crude oil. If you see it hold and it's starting to consolidate and fail, then I think it could open up some more bearish price action that can bring us down to where those buyers were defending their trades, right around those 93s. Okay, new sentiment on crude oil, guys. I haven't really been following it too much, but I know there's a lot of back and forth between like the Russia stuff and whatever demand concerns, supply concerns, and all that. I personally believe the price action, the order flow trumps everything. And obviously the reaction to news events is very important as well. So, I keep an eye on that, and, but the fundamental of everything I do is basically supply and demand zones and price action. So again, there's that big, V-shaped recovery move on crude oil there from Friday. So there's a lot of indecision in these markets right now, and we'll have to wait for what August tells us. And basically, I'm waiting for some traders to show us what they want to do. Wait for that institutional money to come in, and that's going to be the confirmation signal, guys. So if we zoom in here on the S&P 500 futures, this is what Friday looked like. We have a supply zone to be watching for next week. 15-minute is 41.36 and a quarter. That's where we had some initiation of sellers on this chart. For the Nasdaq, it's going to be right around here. 12,979.50. So that's going to be our supply zone to be watching on Monday. And on the Russell 2000, it's going to be right up at 1886.8. And this is our daily chart area of 1880.2. Okay. So here are a couple scenarios that I think are worth watching for next week, guys. One of them is going to be the sellers coming in right away on the Russell 2000, reclaiming this 1880 and maybe seeing a retest of it and a rejection, and then the sellers continue downwards and regain the price action of the prior week. That's going to be one potential scenario that we can see Monday and maybe even going into Tuesday. Another scenario would be we see sellers, on Monday or overnight on Monday, and then we reclaim this area and just chop in this area and a lot of back and forth action. Basically, nothing happens. And then that'll prolong it to Wednesday, and then you'll have to see how that plays out throughout the week. Or another scenario would be if these bulls are really, willing to take this thing out of the park, is that you can see a potential sell-off to test the range of Friday, and then a reclaim of this area, and then just back and forth pretty much all day, but slowly grinding higher, and then, a gap up open the next day, and then we're trading at higher prices by Tuesday, Wednesday, and then, these resistance areas in the daily chart pretty much are insignificant at that point, because what you've seen is a retest of it and a failure to reclaim it. And the sky's the limit at this point. Basically, the areas you'd be watching afterwards here are going to be towards the higher end of this trading range here on the daily chart of the S&P 500, where you're likely to see some liquidity get run out. But I think that judging on how extended it is on the daily chart here, it might not necessarily have to go there right away. But that's just how I'm seeing things. So again, guys, trade what you see. And I'll see you guys in the next video. Hope you enjoyed it. If you enjoyed it, let me know in the comments down below. If you want to see more content like this, I would really like to know. And see you in the next video. Take care. Thank you.